What's going on, guys? Ivaylo here, and you guys are joining us on our first podcast of business, life, and real estate, where I'm going to be bringing in as much valuable people in their own fields to help you guys answer some of those questions that you have. In now, on our first podcast, we're going to have a very special guest. I have Michael Ryan Thibodeau here. He's joining me today to discuss some of the hottest topics related to homeowners mortgage financing solutions in today's current crazy, unprecedented market. So a lot of you guys have so many questions about mortgages and how is it going to affect you guys with the home buying process. So that's what Mike is here to answer for you guys today. Mike is an entrepreneur. He recently re-entered the mortgage financing world. He's also not just an entrepreneur. He's a stock investor. He's a stock analyst. He's so much more to Mike. Now, Mike, I know you from founding and developing UBU Social Media Management. I was one of your clients, and what an incredible experience I had with Mike and his team as well. And you're also the CEO of Fitness Star, traveling across North America doing model search events. Now, what brought you back to the coming back to the professional mortgage agent world?
Well, first of all, I want to say thank you for having me on your podcast, first ever. So I feel pretty special here, man.
Absolutely.
I just recently, got relicensed to become a professional mortgage agent. It was something I did about 10, 11 years ago, had a lot of success. And then I went out into building my own business. And as you know, when you're self-employed as a business owner, you have to be a little bit more in tune with the economy and the world around you.
Absolutely.
And I realized the last couple of years, I don't want to say I was scared, but I had a fear that we were at a peak in the economy. And I was taking a look at some of the statistics, like 74% of people can avoid bankruptcy if they just had an extra $400 a month.
Yeah.
And I looked at some of the credit card debts and the outstanding debt to GDP ratio in Canada. And I was just concerned that we were just a year or two away from going into what could be a deep recession, possibly, I hate to say it, but depression.
Even without the COVID-19.
This was before COVID-19, doing stocks and seeing some of the things that the Federal Reserve were doing, the central banks were doing, and just how much pressure was on the consumer to continue to carry on this market. And anyone that's bought a house, like, kudos, congratulations. If you bought a house in the last, within the last 2 to 10 years, you've done phenomenal. It's probably been one of the greatest investments out there. But I noticed it was just kind of hitting a peak.
Yeah.
And the valuations, in my personal opinion, it was tough to kind of, quantify. Yeah. And so when I looked at the economy, being the kind of person I am and why we did great business together is because we both love to bring so much value to other people in our world. And buying a house is like one of the most important decisions of your life. And then once you have that house, I hate to say it, but that mortgage can act as the biggest liability of your life.
Yeah.
And so with my financial background, I really wanted to be in a position where I was licensed to help people with that process. I wanted to help them get the financing, the money for it. And I wanted to help them how to take that money, whether it was equity and build their self-wealth, or tap into that equity and become financially free. Because as compound interest, it can work for you or it can work against you.
Absolutely.
And so, we're in a very weird time right now with this COVID-19, and I'm sure you got some questions for me because there's a lot of changes in the industry.
Absolutely.
And it's changing every day.
Well, you're completely right, because, the saying is 90% of millionaires in the world all became through some sort of real estate investing, right? And that's not buying one home and holding it for your whole life. It's reinvesting and making the money work for you, leveraging the equity in your home, right? So, right now we're obviously in a very crazy time with COVID-19, and it's impacted every single industry out there, and
directly and indirectly.
Yeah, exactly. And the real estate market, as much as it hasn't been affected as some of the stock market or other industries, it still has been affected, right? So today I have 4 questions for you that I picked these questions because I think they will bring the most value to the viewers. So let's get started with the first question. And this is something that almost everybody, especially if you're a homeowner, has this question on their mind. So should homeowners take advantage of the mortgage deferral program?
The deferral program.
Yeah,
How
that
do they know?
that every single bank is giving out right now. Not every single bank, but most of the top six banks at least.
I'll be honest with you. I think some of our agents have been around for a while. Probably 80, 90% of their calls right now is about this deferral
Yeah,
payment program and how
exactly.
they can take advantage of it. And bigger question is, should they take advantage of it? And I think one of the first ways of answering that is it really depends on who your lender is.
Okay.
So the first thing that a homeowner needs to do is contact their lender and find out what are the protocols, what are the processes with that lender. And there's some real key questions that need to come on board with that. Is, will their interest be compounded? So are they deferring not just the payment, but are they deferring the interest as well? I've heard some lenders are not charging interest during this time. And if that's the case, wonderful. That's definitely a big plus. The other thing you want to make sure is that it's not going to hit your credit score in any negative effect.
Okay.
That it's not going to show that the mortgage in any shape or form is, outstanding.
Yeah.
And the last thing you just want to make sure is, what's the prepayment, like the repayment schedule?
Yeah.
What is that like?
Okay.
So these are the most important things when it comes to, if you're going to take advantage of the deferral program. Is the interest going to be compounded because now your mortgage is getting higher, right? How much can they take advantage of? How many months?
So
Some
just
might be.
sorry to interrupt you, just kind of for the people that are not too familiar with how the mortgages work. Say that the banks are charging interest and it is compounded. Now, what is that going to look like for your payments when it comes down to paying back that once your mortgage payments start again? What is that going to look like on your payments?
Well, again, obviously, the most important thing is to pay down the mortgage, right?
Okay.
And as we already know, if you have a big mortgage, there's a very little amount of it that's actually going towards the principal.
Yeah.
So if you're going several months without a payment, that time is still elapsing at an interest rate you have. So that interest is compounding.
So
So
technically, you're paying interest on the interest.
exactly.
Yeah.
Easiest way to say, you're paying interest on the interest. So you want to make sure that the lender is not just deferring the payment, but the principal and interest. You want to
Okay.
make sure that they're deferring both of them.
Yeah.
And you want to make sure, because again, some of these banks, I hate to say it, but they change the rules sometimes. You know what I mean? So they could say, yeah, no problem, deferral payment for up to 6 months, but then do you have to pay that 6 months in full at the end of the term, at the end of the year?
Mm-hmm.
Do you ever have to? These are questions that I think the homeowner really, truly has to answer. And what I'm telling my clients, just so you know, is I'm telling them, get the answers, like figure out what the protocols are, the processes are, but do not take advantage of this unless you absolutely need to.
Yes.
I,
Yes.
I think a lot of people are just thinking like this is free money.
Mm-hmm.
It's not. This is a very unfortunate chain of reaction that's happened in circumstances, and government's trying to do what they can do to help us. And if you need it, take advantage of it. But if you have savings, if you have a line of credit, I say take that first and use that to keep plugging away.
Mm-hmm.
Or other potential options, as we're going to talk about, refinance.
Mm-hmm.
See if you get pre-approved on a low interest credit card or line of credit. But there are other products out there, so you know just ask the right questions before you make a decision.
So pretty much just call your bank because every single lender is going to have different criteria of how they're deferring.
Exactly.
And if you absolutely need to, and you obviously can't live without the deferrals, then take advantage of it. But if you do have those savings, it's probably going to hurt you in the long run if you take advantage of it now, as opposed to if you have the ability to pay it, just pay it now.
I think one of the bigger issues that we're not even talking about is mental health.
Yeah.
And that's where you don't want this to negatively be impacting your mentality and your attitude and and just like a lot of people right now are falling into depression, being
Yeah.
locked up. So
Absolutely.
this is the banks trying to say, hey, we want you guys to stay positive, we want you guys to keep plugging away, but we're here to help you if you need it, and take advantage if you really need it.
Okay. Perfect. No, absolutely. So the biggest thing is just call your bank because every single bank is different,
Yes.
and get the answers from them. Okay, so let's move on to the second question. So this is also a big question that almost every single person, I don't know the exact numbers. I think over 4 million people have now lost their jobs or are temporarily unemployed and stuff like that, right? So a lot of people that were on the market to buy a property before COVID-19 have now lost their jobs. So they probably have questions. Hey, listen, like, how's this going to affect me? So my question is, how are temporary job layoffs going to affect buyers looking to get a mortgage during this whole COVID-19 and maybe even after that?
Well, let's be honest, it's going to make it much more difficult,
Okay.
especially with the big five banks.
Yeah.
They want provable income, and even on the refinance side as well. Some of my clients are laid off now. They work at Chrysler, they work at different plants that have been laid off, and now they don't have income.
Okay.
So there's different things that lenders are starting to do, and what like Canadian emergency funds now can be used as like income.
Okay.
Yeah. So there's different options that the lender's doing to try to make it be flexible, but
Yeah.
it's definitely negatively impacting their ability to qualify. That's for sure.
So I guess a follow-up question on that. So once everybody comes back to their jobs after their temporary layoffs, COVID-19 is over now, and everybody gets back to work. I know that a lot of the lenders are asking for T4s from the last couple of years and stuff like that. But during obviously COVID-19, they didn't have that much income. Now, is that still going to be um, the case of the lenders looking for that income, or what's going to happen?
It's going to affect everybody. It
Okay.
definitely is,
But
and
they're
I
still
think
going to take a look at that and say, well, you weren't earning during those 4 months, 5 months, whatever.
at the end of the day, you got to think that these mortgages that are going out, they're investors. The people lending that money are investors, and
100%. Yeah.
there's risk management, so
Hmm.
they have to take that into factor.
Okay.
And so this is going to be one of the reasons why an individual definitely wants to talk to a mortgage broker.
Hmm.
As mortgage brokers, we deal with a lot of different lenders. I at Bespoke Mortgage Group, we deal with over 30 lenders,
Yeah.
and those 30 lenders have literally over 100 products. There's so many different products. So, and there's two different sides of lending that most people don't know. There's the A side, which is the big five banks, the Scotia, CIBC, TD, Royal. But then there's B lending. And B lending, I think, is going to get pretty dominant in this kind of
Yeah.
marketplace, because on the B side, which is not, it's not private lending, but it's mortgage financing, and they're a lot more flexible.
Okay.
And their rates might be 5-15 basis points higher than the big five, but they become much more aggressive in being competitive with the big five banks. And they're much more flexible in terms of the paperwork and income verification, and so I think that's where some homeowners that are maybe turned down by their bank,
Yeah.
they need to find a professional mortgage agent that can really guide them and educate them, and let them know that there is a lot of options out there for them.
Okay, that's perfect. I know that a couple times we talked about that you guys do a lot of volume with Scotiabank and
TD. Yeah,
TD as
TD and
well.
Scotia are two of the big banks that we deal with, and then we do a lot of business on the B side.
Yeah.
Home Trust, Equitable Trust. There's a number of them.
So there's a lot of flexible options for those homeowners that especially those people that have never got a mortgage, first time home buyers just walking into the bank, nobody knows who they are. um, there's a lot less chance of them getting a mortgage just walking into the bank, as opposed to going to a mortgage broker who can take a look at all the different banks, not just the A lenders but the B lenders, and see how they can finance their home that way.
Well, again, I don't want to knock the banks. Like, obviously, they can go into the bank, and if they have provable income and they have great credit, then 100% the bank can get them a mortgage.
A
The
lot of
question
the time,
just
most people are not those
true.
perfect clients, right? So
Yeah, and the truth is it the right mortgage?
yes.
That's the real answer. Like, getting a mortgage and getting the right mortgage are two completely different stories.
Yeah.
If you find the right mortgage broker, and that's why I joined Bespoke, because the attitude and mentality and the values there is that we go above and beyond and always provide added value. So we look at every single situation unique.
Yeah.
When you send me a client, I want to have a good half an hour to an hour conversation with him and just get to know him. What is he looking to do? What's his objectives? What's his background? What's his credit history? And we
Hmm.
look at everything, because once we have all that knowledge and the documents to support it, or maybe lack of documents, we
Hmm.
can then assess, like, what is the best lender and what's the best rate we can get at the lowest fees and the lowest costs.
That's perfect.
Yeah.
Okay. Awesome.
And they do vary. And this is why it's so important to have a broker that deals with like 30-50 different lenders and actually knows these different products,
Yeah.
because there's a lot of different products out there, and each one
And
can
they
be
keep
better
changing
for you.
they keep
Yeah.
changing all the time too, right?
Yeah,
So
exactly.
product knowledge is one of the most important things when it comes to the mortgage professional. Product knowledge is just one of the biggest things that they can look for. So
Well, something we talked about the other day, and I wanted to bring up because when I was a mortgage agent before, you talk to your mortgage agent like once every 5 years,
yeah,
and they call me at renewal. We'd sit down, go over the options, get them in a new mortgage, and that was it. Times are changing now. Like the rules and regulations are changing, the rates are changing, everything's moving at such a hyperactive speed.
yeah,
I truly believe that homeowners got to start talking to their mortgage agent or their financial advisor at least like once a month,
yeah,
maybe even once a week,
yeah.
but at least once a month. Because again, are they on a variable rate mortgage? And what's going on with the rates? Are they going up? Are they going down? Are they going to stay stagnant? What's going on with home values? There's a lot of different questions, like what different products are coming out that might be good for them if they got laid off.
Hmm.
How can they extend the credit? So, we work on a number of different financing solutions, and it's good for the client to stay in constant contact with the broker to make sure that they always have the best product and they're always in the best financial situation.
Well, absolutely, right. And the first hardest part is getting your first home. Once you have your first home and it's the home just sits there building equity, you definitely want to be in contact with your mortgage broker, like you said, once a month, just to kind of see what can I do with this equity, what are my available options, because new products keep coming out every single month. So it's always good to have a mortgage broker that you can relate to, and he can let you know, okay, well, if you want to buy that boat, you want to buy that car, you want to buy that next home, you want to buy whatever it is, right? Let's take a look at your options, how we can use your home equity, and other options, not just home equity, right?
And,
So
and let's just let's give some advice to the younger people. I know you
yeah,
got probably a younger
yeah,
audience, and let's give them
absolutely,
some advice because everybody wants to just get the hell out of home. I want to get
yeah,
away from mom and dad, and probably a big percentage of them end up paying rent. And the
yeah,
problem is, if you look at the data, the rent is pretty much the same price, if not more than the mortgage payments.
yeah,
So something that I learned and I took advantage of, and I tell all the young people now is, start saving from the time you're 15, 16, 19,
hmm,
your first job. Take advantage of being at home. Take advantage of, the lack of bills, because once you live out on your own, as you know,
yeah,
heat, hydro, cable, phone,
yeah,
life gets a little bit tougher. But, you know, set a goal and set a timeline and just get that down payment,
yeah.
because purchasing a house has been one of the greatest investments in the world, and it's done phenomenal, and there's
Keep
so many ways
proving
you can
over and
tap.
over again. Yeah,
Yeah, there's so many ways to tap into your equity. So I strongly advise people not rent if they don't have to. Again, depending on your environment, maybe move out for a year to just grow, whether it's personally and professionally, spiritually. But figure out a way to sacrifice and get that down payment, and get into a home, even if it's a small starter home,
yeah.
a small little condo. Just build equity for yourself. Don't pay off somebody else's mortgage.
Exactly. Plus, even if you are in a starter home, a smaller home, whatever it is, that equity is going to appreciate a lot quicker than your money sitting in the bank, doing absolutely nothing.
My
Right.
mom and dad were a perfect example. I'll share their example. We stayed in the same house prior to when I was born. They stayed in the same house for about 25, 28 years.
Yeah.
And as soon as my parents had paid off the mortgage of this gentleman, he moved in and basically booted my family out.
Wow.
And then we moved from home to home for a couple years. And finally, my mom and my dad, they sacrificed for like 3 years, and they did big balloon RSP payments to
Okay.
get back taxes.
Yeah.
And literally within 3 years, they had able to put together about 40, 50,000. They put it on a down payment on a house. And that house has gone from 220,000 to over 800,000 now.
Yeah.
So
Gold prices.
40,000 has made them like $600,000.
Yeah. Absolutely.
Like you're talking Apple type returns, you know what I mean? Like this is incredible. So that's why you really gotta figure out a way to get that down payment and become a homeowner.
Absolutely. All right. Let's go to kind of brings us into our next question. Is this a good time to refinance your home?
Wow, that's a great question, because in my personal opinion, we're kind of getting to this edge here.
Okay.
Um, the last 2-3 months, I think we're prime time to refinance, and the reason why is that the housing values were still kind of at peak levels, right?
Yeah.
And so when you're able to get loan to value up to like 80%, and you need to get the funds to get you through the next year or two because of what's going on right now, businesses are really slow, and People are not making the same amount of money as they were before. You want to get appraisal at the highest value possible and then be able to tap into that equity, right? Well, what's starting to happen is because of the coronavirus, lack of sales, a lot of appraisers are not doing full inspections. There's so many changes that are going on. The values are starting to come down. We're seeing it. The other day we saw Royal Bank came in at like 700,000 and the client told me guaranteed 750 minimum. So 50,000 lower. That's what's starting to happen. So to answer that question without dragging this on too long, if you're stretched financially, you got a lot of debts. Those debts are at high interest rates. And maybe you're worried about work. 100%, this is the best time to refinance. Take advantage of the low rates. Like, we're almost all-time low in history. Like, some clients tell me, "Oh, I'm waiting for them to lower the rate." Rates are like 2.25.
Yeah.
You want them to go to zero? Like,
yeah.
People don't understand that in the 80s, interest rates on houses, on mortgages were 16, 19%. Go talk to your parents about that.
Well, even in 2000, they were about 14%, right? So
crazy. So, definitely take advantage of these low rates because we don't know what's going to happen. We don't know if we're going to go into a major stagflation or inflation, and the rates could go through the roof. We really don't know. We're kind of guessing at this point, and we don't want to guess. So, this is definitely a time to take advantage. Take all of those debts, consolidate, make a significant cash flow savings, and utilize a refinancing to get ahead financially, to get the stress off, number one, because we all stress about our bills. It's probably one of the biggest reasons for divorces these days is money issues, right? So yes, definitely, I think this is a wonderful time to refinance, and be careful, because if the housing market does start to drop, I don't think you're going to have that same luxury. I think why I said we're getting to this edge, because we're getting to a point where
at least you won't be able to pull out as much money as you would at this point.
Yeah, we may get to a point in the summer or fall if this continues, if this lockdown continues and the economy, God forbid, goes into a deep recession. A lot of people may have to wait several years until their mortgage comes up for renewal, or before they can refinance because of their income situation. So anybody that is maybe going to have financial issues or struggling right now, I would definitely speak to a mortgage agent, figure out what your options are, and just know what your options are. So you can be, what I tell everyone is, be proactive. Don't be reactive. So whether you want to break the mortgage now or not, refinance now or not, that's kind of irrelevant. What's most relevant is, what are your options? Where are you? What can you do? What's available to you? And then you just always know that if, pardon my language, if shit hits the fan, so to speak, you always know you can pick up the phone and get yourself into a much better situation.
Absolutely. So for some of you guys that are not as mortgage savvy as others, pretty much debt consolidation, say that you guys have, credit cards and line of credit, all at, credit cards at 19.99%, your line of credits, if they're unsecured, are more likely than not at 12 to 14 to 15%. And you guys have pretty much all that at 50,000, 100,000, whatever it is. If you're able to go into your equity, right? So right now he's talking about an 80% loan to value that they're able to lend. Say that your home value is 1 million and you have another $500,000 of mortgage on it. So pretty much what the bank will be able to do, everyone's situation is different, is take that $1 million minus the 500. You have 500 of equity, take 80% of that, which is going to be $400,000. Now you can take that 400,000 at a lower home equity line of credit interest rate, which is probably going to be closer to the 4.99. Am I correct?
For fixed or variable right now is going as low as 2.45.
No, for the HELOCs.
Some of the fixed are as 2.69, 2.79.
For HELOCs?
On HELOCs, you're about 4.5 to 5.5. So
4.5 to 5, say, that's a lot better to pay and consolidate all your debt at 4.5% rather than having all those credit cards and line of credits at 19.99%, at 12%, right? So this is definitely the time to take out the equity while your home value is still at a good price, because if this continues to drag on, like Mike said, home values are going to drop. They're going to be only able to lend you less money. So just for those non-mortgage savvy clients out there, just wanted to kind of clear the picture a little bit and just
Well,
give a
even in
real
my
life
marketing,
example.
to give you a quick, I guess you could say picture, a $50,000 home equity line of credit, payment on a $50,000 is about $299. Now, 50,000 on your credit cards at 3% is 1,500.
Yeah.
So that equates, if you take that over a year, like if you did a 1 year 50,000 HELOC, like you'd be saving over $14,000 just in cash flow savings.
Yeah.
So, $1,000 extra in your bank account could be the difference between going bankrupt,
Yeah.
or keeping your house.
Absolutely. Super glad that we went over the refinance, because
Yeah.
that's I think a lot of people would have that as an option right now, especially for those homeowners.
And like you said, and you brought it up, you look at the refinance option, which is, so people that don't know, it's consolidating your first mortgage and taking equity and merging it into one single payment. But if that's not an option, if God forbid you're on a fixed mortgage rate and the interest rate differential is too high, the cost to break that mortgage is too high, then yeah, definitely a home equity line of credit. Tap into that equity. It might be 4 or 5%, but that could be 14, 15% lower than your
Yeah.
credit cards that are 19, 20 plus.
Exactly.
So,
Exactly. Super glad we went over that. Okay, last question. So this is for a lot of people out there. I know a lot of my clients are self-employed, and I know there's many other people that are self-employed out there. So if I'm self-employed and can't, what if I'm self-employed and can't prove or show my full income? What do we
well,
do for
that
mortgages?
that that was me, right? When I was in my
Yeah.
20s and I got my down payment to buy a condo, I couldn't go to the bank. I was
Yeah.
business for self, and when you're in Canada, you got a lot of costs. You try to write off everything you can.
Exactly. Yeah.
We don't truly show every penny that we make.
Yeah.
And so what I had to do is I had to go to a mortgage broker. That's how
Mhm.
I kind of got introduced into the world of financing on the mortgage side,
Yeah.
is because the bank wasn't able to help me, but had a mortgage agent that was able to get me on the B side. I had a slightly higher mortgage rate at the time for 1 year. And then right after, I got into Scotia and had the lowest rate on the market, and
Yeah.
allowed me to build equity. So I think business for self is a prime example of where a mortgage agent can be so critical, because we're dealing with 30 to 50 different lenders. While you're one bank or two banks you deal with, maybe you're not applicable, or maybe the rate that they're giving you is high. We can go to various different alternative lenders and figure out, for example, business for self. We have a business for self stated income program. So we can look at 3 months, 6 months of your income statements, your financial statements, to show that there's cash flow going in there,
Okay.
and do a business for self program. Interest rates slightly higher. It's not significantly,
Yeah.
but you're getting the mortgage. You're
Would
getting
you
a
say
house.
it's like
You're
maybe a
building equity.
percent higher, percent and a half too? Like,
I could go anywhere, like I said, it could go anywhere sometimes from, 15 basis points to 75 basis points. It's really gonna depend on your credit, because sometimes people come to us in this situation where it's like, this is the best one. It's like, business for self. I don't really show I'm making any money, and I have poor credit. I want to buy a house.
yeah.
So, this is where we got to say, okay, well, do you have money for the down payment? Where's
Yeah.
the down payment come from? Have you saved it? Has it been in the bank account for 90 days? One of the things I do as a mortgage agent, I'm a little bit more like a financial advisor as well. So, what I do for any of your clients or anyone watching this call is I do a free credit assessment.
Okay.
So I will pull up an individual's credit bureau with them and see if there's any discrepancies. There's been a lot of times where maybe Equifax uh, put something in wrong, or
It
there's a
happens.
letter.
Yeah.
It happens all the time, especially with cell phones. Cell phones are the worst. We're kids or we're teenagers. We didn't pay a cell phone bill, and now you got an
There's
R3,
always that one
R4.
bill. Yeah.
Yeah, it's written off. I don't want to say that's happened to me a few times in my 20s, but it can destroy your credit score.
Yeah.
So, again, having a professional mortgage agent, that's like, we're allowed to talk to Equifax, so we can talk to Equifax for the client,
Yep.
and we can give them some very quick solutions. I've helped clients literally boost their credit score 50 to 100 points within like 60, 90 days.
Yeah.
Some of them
Absolutely.
within 30.
Yeah, and
Um,
a lot of people don't have no idea that, once your credit score is so low, they think, well, I'm stuck here for the next, years or whatever. And just having a quick conversation with somebody like yourself, like, just taking a look at the credit, you can boost your credit by 50 to 100. in less than 60 days.
Literally 10-point difference, 5-point difference, 1-point difference can be the difference between declined and approved.
Yeah.
Literally, you got a 649 credit score and lender wants 650 minimum, and now it just got declined.
Yeah.
And it literally can be the difference between, just your credit utilization, a payment being made, mixing around some money. But 100%. And what I love that you do on your Instagram is you're constantly sharing different knowledge about just finances, not just real estate. You're
Absolutely.
teaching clients about investments. And I think something that you should continue to do is teach them about credit, how to build credit, the power of credit, and why it's so important when it comes to purchasing their house.
No, absolutely. Like, again, giving value as much as possible. And again, real estate can't happen without the person getting a mortgage. I know there's
Yeah.
obviously those people that pay out cash for the homes and stuff like that, but that's 1% of the population as
And
opposed to.
who's going to give you a mortgage if you can't even pay your cell phone bill?
Exactly.
If you pay a $100 cell phone bill, how are we going to give you a $500,000 mortgage and think that you're mature enough to pay that? So again, when we're young, when we're in our 20s, so sometimes
We
we're
don't
not
really think about those things, right? Like, again, like, people are like, well, I'll worry about that when the time comes 10 years from now. But the problem is it stays on your credit for a very long time, and it affects your credit a lot, right? So definitely some good
to give you
insight.
an idea, just so people that are watching this, so they understand how important paying your bills are, like lenders are looking 2 years back, not even 12 months now. Sometimes they're going 2 years. So you could have been a year and a half ago, you missed a cell phone payment, you maybe missed one of your credit card payments, could have been, on vacation, whatever reason. And all of a sudden now you're not being approved for a mortgage. So, everybody that's listening, a credit is detrimental to you, getting approved, but more importantly, getting the best rate on the market.
Exactly.
You want as much as your payment to go towards principal, not interest. You want to pay down your mortgage as quickly as possible. So, good repayment history when you're young, it's definitely going to help you in the future.
Well, at the end of the day, again, if you don't care about your credit, then you're going to be stuck with a private lender at 15% and more, right? So if you want to pay 15% on $500,000 to $1 million, it's just crazy money. It's not even worth having a house.
I deal with private lenders, and God bless them because they save a lot of lives and they help people out of a lot of jams. But the fees that some people have to pay they're ridiculous, and we want to avoid that. When I meet with clients, one of the things I say to them is, I want to put them in a position where they never have to deal with me again.
Yeah.
And what that means is I want to build their credit. I want to improve their education on finances and developing wealth and budgeting, and then get them into a mortgage, and then teach them how they can make sure they have positive cash flow. So at the end of that term, they can walk into any bank and get the best rate on the market.
Exactly.
And thankfully, a lot of them do come back to me. But again, the right mortgage agent will put the client in a position where they don't need them. They'll continue to do business with them because they want to, because they love doing business with them.
Yeah.
But we won't have to do business with them. And that's my goal. My goal is to get clients to be suitable.
Yeah, absolutely. So just to go off just on the last point here. So for those self-employed people, say that they go to the bank, I know that usually you guys ask for the last 2 years of T4 statements and stuff like that. Now, what's the difference in them going to the bank and them going to the mortgage broker? I know you said that you're going to take a look at the last
so
3
on
to
the
6
A
months.
side, 100%. So it's the paperwork that's involved in the process. So on the A side with the big banks, TD, Scotia, RBC, they're going to typically want 2 years, T4s, NOAs, or T1 generals if they're business for self.
Yeah, T1 general.
And again, not everybody has that, or the numbers that they show are not as high as what they really are. So that's why, as a mortgage agent, we can bring them onto the B side. And if they have good credit history and they got the down payment, we can put them through a B lender at a slightly higher interest rate, and they could just do business for self. So they don't have to show the T1 generals, don't have to show NOAs. Sometimes we'll have 3 months, 6 months bank statements and be able to show that there's cash flow and be able to prove that the income that should come in over the course of a year.
Okay.
Yeah.
So pretty much you put them on for what, a year on the B side?
Yeah,
and then
what I try to do on the B side, is a great question. I want to keep them on the B side, typically, depending on the interest rate, as little as possible. So, for some people, if it's a high interest rate, I just want to do a 1 year term.
Yeah.
I just want to get them in the mortgage 1 year, prove repayment history, build a credit score, and then try to get them back into the banks. But depending on their scenario, again, every
Yeah,
single
it's
deal
unique.
we work on is unique. If they don't think in a year from now the situation is going to change, I don't want them to have to go through all those fees again, lawyer
Yeah,
fees, lender fees, broker fees. I don't want them to do that. So if they think that, hey, Mike, it's actually going to take me maybe 2-3 years before I
yeah.
can really get out of this, I'll go to a B lender that has a 2 year or 3 year term, again at the most competitive rate possible, looking at the lowest fees, and then try to pitch the deal to the client and see if it's in their best interest.
Okay. That's awesome. Definitely some good insight there. That's pretty much all the questions I had for you. But I just wanted to ask, like, is there anything else that you think is super valuable right now that some of the clients and potential homeowners, current homeowners during COVID-19, anything else that you can say to them that would be bring them as much value?
I just preach a lot about education. I think the application of education is power. I don't think knowledge is power. I think the application of knowledge is power.
Absolutely.
So if you have a mortgage broker that sends out a newsletter updating their clients on the rate changes or changes regarding COVID-19, like you did with me, like ask your mortgage broker to put you on their mailing list,
Yeah.
or whatever bank you're with, maybe take a look at their quarterly reports. Just be a little bit more familiarized and a little bit more educated on what's going on in the economy. Um, what's going on with rates, what's going on with lenders, and just be a little bit more knowledgeable, because and this is why, if you're knowledgeable, nobody can kind of swindle you or scam you. and,
Absolutely.
and and I hate to say it the wrong way, but not every mortgage agent has the best interest for the client. There's a
Of
lot of
course.
mortgage agents, they've given us bad name and bad reputation because
Believe
of the
me, the
fees.
real estate industry is the same.
Yeah, and every client that I talk to, it's funny. I've heard this. You probably heard this. Well, I don't know about when you're buying a house, but I hear on the mortgage side a lot of times, like, I don't have a choice. I don't have an option.
Yeah.
And I tell every client before they sign any document that one of the options is always doing nothing.
Yeah.
Sometimes doing nothing is the best option in that
100%.
moment,
Yeah. Everyone has
right?
a different financial situation, right? So
Yeah. So at the end of the day, the right mortgage agent should be putting in the time and effort, collecting all the data, educating the client, and then giving the best option. But the client can already be proactive and just being a little bit more knowledgeable about the real estate market and about the economy. In that way, when they do meet with a mortgage broker, they're a little bit more knowledgeable and they can have a deeper conversation.
that's awesome. That's awesome. Well, we're gonna wrap it up now. Really appreciate you coming on,
Thank you.
Mike. Absolutely. I think the audience got tons of information that I think is very valuable. Obviously, for you guys out there, if you guys want to get in touch with Mike, he is a plethora. I like that. I like that word, plethora of resourceful information for you guys. Even if you have no plans on buying or selling or remortgaging right now, just giving him a call and just asking for some information for the future or for right now, whatever it is. I'm going to put his information right below. Also, you guys can visit um, tapintooyorequity.ca. Pretty much all the questions that you guys are going to have there is going to be on that website. Obviously, you guys can get in contact with Mike directly, whether you guys want to
And a
email
lot of
him or
things we
call him.
talked about, a lot of the definitions and terms are
Yeah,
all on my website. So, what's
perfect.
refinance, what's debt consolidation. They could go on my website and just educate themselves. So definitely
Absolutely.
tapintourequity.ca. Take a look at it when you have some time.
That's perfect. Thanks again, Mike. And for you guys out there, this is the first episode. More are coming. I'm hoping that you guys got tons of information for myself and Mike. I will definitely talk
It's
soon.
been a pleasure. It's been an honor. Thank you so much, man.
Thank you so much for tuning in to today's podcast on business, life, and real estate. I hope you guys got tons of value out of today. And if you did, please leave a like, subscribe, and comment below. I would love to hear from you guys about what your opinion is or what questions you might have. I'm always here to answer them. You just make sure that you are tuning in into our future episodes, as I'm going to be bringing in many, many different business owners, entrepreneurs, just to make sure to help you guys out with any questions in different aspects of life. Until then, I hope you guys stay as safe as possible. And like I said, subscribe and look out for future episodes, as you're going to get tons of value. Hope you stay safe, and we'll talk soon.